Good morning, I'm James Lopez, President at HomeFi Corporation, and this is today's mortgage and real estate market update. Now, mortgage bonds are down this morning about 42 basis points from where they ended yesterday, where they closed yesterday. The 10-year yield is up about 7 basis points, which means the mortgage rates are most likely going to open higher today and stay in that position, just depending on news that happens today. Now, the markets are really preemptively moving towards what they foresee the Fed saying. The FOMC minutes will be released later today from the FOMC meeting with the Fed. And basically the markets are kind of pre-positioning or building into their pricing what they expect is going to be happening with the Fed over the coming months, and that's being reflected in the stocks. Stock futures were down at the time of recording. Again, mortgage bonds are down, and treasuries, or the yields are up on the treasuries, and they're trading about in the same range they were trading in 2018. So that's about where treasuries and bonds are now. What's really driving some of this conversation and topic from the Fed is really the balance sheet. That's the thing that we kind of think is one of the more important pieces of what's going on with the Fed. The reason why it's important is because whenever the Fed bought mortgage-backed securities during the pandemic, all of those mortgage-backed securities that they've held, as those have matured, or the returns from those securities, they've been reinvesting those back into the mortgage-backed security market. Now, while they've slowed to almost a complete stop the purchase of mortgage-backed securities, they're still reinvesting the returns from their securities that they have already purchased, and it's called a balance sheet. They're holding a balance sheet. Now, as the Fed begins to what they call normalize the balance sheet, which means as they stop reinvesting those returns, it's going to lower demand for the mortgage bond as a whole and the mortgage-backed securities. And as demand lowers, obviously the price lowers. And so what happens is that in order to create more demand, investors or banks rather have to show that there's potential for a higher yield from the mortgage bond. Well, how do you do that? The mortgage bond the yield is directly supported by the underlying securities, which is mortgages. So you raise the interest rate. So that's kind of what it looks like is happening over the past couple of days, really the past few weeks. It's been kind of happening. Now, last week we did see some gains in the mortgage bond and market, and that's all but been erased over the past couple of days, especially with the Fed kind of taking a little more of what is called a hawkish stance on their balance sheet and on interest rate hikes. Now, we do expect today, like I said, mortgage interest rates to open up higher. Do expect there's potential for mortgage interest rates to go higher. Just depends on how sharply the market overall responds to the meeting, the minutes for the meeting today, and just in general the Fed's stance on their balance sheet going forward. Now, also later today, MBA, the Mortgage Bankers Association, they're going to be releasing their mortgage application for data for last week. We'll let you know what that data looks like tomorrow in the report. Other than that, not a whole lot of news today, kind of a quiet day. We hope you have a wonderful day. If you have any questions, please feel free, comment on the video. We always respond to our comments. If you've got any questions about, what do Fed interest rates mean? What does a Fed hike? What does all this mean? If you've got questions, you want to explain a little bit more, leave a comment. Make sure you subscribe to our YouTube channel and head over to Facebook and like our page there to get these daily updates. Hope you have a wonderful Wednesday, and we will see you tomorrow.